What if you were able to identify the next great trade before the catalyst for that trade even occurred? And what if I told you that trades like this occur over and over again? My name is Steve Spencer. I've been trading for over 20 years. I'm a partner at S&B Capital, proprietary trading desk in New York City. If you're interested in more in-depth instruction, click on the link on the video that takes you to the sign up for our free workshop. Today, in the next 10 minutes or so, I'm going to explain to you why it is essential that you become a pattern recognition machine. Developing this skill will give you more trading edge than most short-term traders have. Developing this skill will give you the confidence to execute trades with more size. Every 3 months, publicly traded companies report earnings. And after they report, their price will move more than at any other time during the year. Many stocks will move more than 10% in a single day. But even more importantly, stocks that report at the beginning of earnings season will give you clues to how stocks will trade and react later in earnings season. But the key to becoming a pattern recognition machine is understanding more than simple price action. It's understanding how to group stocks together with other criteria first. And so in the next 10 minutes, I'm going to teach you exactly how to do that. The first thing we want to do is find patterns during earnings season. And what that means is how do stocks move in that day after they report and release their earnings. A simple example of this is a technology company reports their earnings and it gaps higher on the open 10% the next day. And in the first 15 minutes, it drops immediately to the low and then closes at the low of the day. And this might happen in a big technology stock early in earnings season. And I'll take a note of that. And then the next big technology stocks reports, and the exact same pattern happens again. It opens up a few percent, it closes at the low of the day. Then I'm starting to see a pattern. A couple of things are happening right here. Similar types of companies. That's the second important part of it. It's not just the price action itself. It's that are these things happening with similar types of companies? And the next thing that I want to look at is the reaction following through after day one? Does day two happen and the pattern that happened in day one, does there follow through? And I'm gathering this criteria, similar companies, similar price patterns. And once I've seen that, I'll look for the next similar type of company to report. And even before it reports, I might put on an options position, kind of putting on an educated guess based on the type of earnings that those first two companies reported, because they're similar type of companies. And then when the actual report happens, trading it based on the pattern that I've recognized on the first two times. And something that's really important, some of you with a more of a statistics background are probably asking you this question. Hey Steve, why are you saying after a couple of companies that are similar type companies reported and they had similar pattern, like why statistically do you think that's significant? That's not a statistically significant sample size, not at all. Well, that's, you know what, if you were waiting around during earnings season for a statistically significant sample size, earnings season would be over before you took advantage of what I'm teaching you right now. And so the important thing is to understand the reasoning behind what I'm going to teach you and give you examples of right now is that similar hedge funds, similar traders, similar types of market participants are looking at companies that are similar, recognizing that their fundamentals and their technicals are lining up, and they're putting on positions based on those things. And so that's why it's important to kind of develop this skill. So I want to give you an example from the most recent earnings season and kind of walk you through my process at the beginning of earnings season when I first saw a company report, what my analysis was, how I was going to trade it, and what happened. And then the next company came along, reported my analysis and what happened. And after I had those two examples, I basically was able to extrapolate for the next one and be a lot more prepared to take advantage. So here's the first example. This one reported first. Lululemon, many of you I'm sure are familiar with it. This is a company that sells clothing, activewear for both men and women, and it's higher end, higher priced. And so what I would consider this, I put this into a group of companies that I would call an affluence brand, meaning people who are living in large cities, willing to spend a little bit more typically for their clothing. They're willing to pay a little bit more for higher quality. And so that's kind of the fundamental grouping. And then if I look at this long-term chart, what I can see is in the few months coming into earnings, it just had broken out, had gone up about 25%, had run up, broken out above 80, trending up to about $105, $106 a share. And even the few days before earnings, you can see went from about 100 to 105. So even that week before earnings was bid up. So what this tells me is people were expecting good numbers. The buyers are in control. That's the technicals. We come in. Then it reports. Here is a slide on the day of the earnings. It was actually our number one stock we were looking at. We identified two levels. It immediately popped from 105 to 110. Our support level 2 was 108. Our support level 1 was 110. The way that I judge the strength of this stock on day one is, can it hold above these two levels? Does it move up above them on the open? And after the open, hold higher. Notice that the notes on the game plan right there, 108, 110 is support, resistance none. The reason why resistance is none is it's just made an all-time high, and that's important technically that there's no natural sellers above these levels. And then you can see in the notes, they beat by 20% on revenue. They guided higher for the next quarter, the next year. And then the third thing I say there is it's up 40% this year. And the reason why I put that in the notes is it's basically a word of caution to the people on the desk. Like, hey, this is really, these are good numbers. There's no technical resistance. But the stock coming into earnings this year, the first 6 months of the year, first 5 months of the year, has gone up 40%. So although it's a bullish setup, it's gapping above resistance, I want people to be cautious. It closed at the high. The next few days, it held the gap, which is important. So here's the second example. Restoration Hardware. This is a stock that was moving for about 6 months between $80 and $100 a share. Right before the earnings reported, it's probably not a coincidence, it probably happened right after Lulu reported, it broke out above 100 and went up 15% or so coming into its report. And the reason why Restoration Hardware, RH, is similar to Lululemon, this is another brand. It's like a more expensive version than a Pottery Barn or a more expensive version than a West Elm. The tables and the furniture they sell at the store might be a 30 or 50% premium to some of these other brands of similar products. So again, people living in cities, people making a lot of money, that's kind of what these companies have in common. So there's the fundamental connection, and then there's also the technical connection, meaning it was strong coming to earnings and a strong uptrend has just broken out, taken out the high. So here's an example here's a chart of what it does on the day of earnings. Notice it goes from 115 to 125 immediately when the earnings report comes out. We identify two potential support levels based on the after-hours price action 140 and 135, support level 1, support level 2. Now notice, I just wanted to show you, I clipped the entire example there of what was in play that day, and it was the third thing. My thought was $130, $140 stock might be more difficult stock for people to be trading, and so I put it third. And again, we haven't had the pattern established. I do know that it's similar to Lulu. I do know that it's gapping up on girded earnings. You can see my notes there. It's gapping up, and they guided higher over 10%. So those two things. And what does it do? It ends up on day one actually trading up from 140 to 165 before settling in and moving sideways the next of the day. And what we have there is over the next couple of days is it holds that gap above 150. So at that point, I actually put out a message on StockTwits and Twitter, and I said, hey, I'm seeing a pattern here. What affluence brands have been in huge, strong uptrends in the past year, similar to Lulu and Restoration Hardware? What are they? Because myself, nothing really came to top of mind. And the response I got on both StockTwits and Twitter was Goose, J-O-O-S. And I remember when this person responded to me, G-O-O-S, that one of the traders on my desk 6 months earlier had told me about this brand and told me about this stock actually, and told me the jackets were really good. So again, another brand catered to people in cities. People are making more money than the average person, top 10% type people, spending a little bit more for higher quality. And they gave me this example. So I was armed with this. They hadn't reported yet. In fact, you can kind of see StockTwits highlights. It was $44 at the time. It's gone up 40% since this person gave me a heads up. So at that point, when you get the heads up, you can look at buying the $50 calls, about 10% above where it's trading before it even reports. That's one way to take advantage, define your risk before the numbers even come out. But as short-term traders, what do? We take advantage of when the trade happens. And by the way, when they gave me that example, I punched up the long-term chart. Here's what it looked like on the long-term chart. Had gone up from $25 to $45. And again, Probably why it had moved up 10% coming into earnings, because Restoration and Hardware and Lulu also were breaking out. Similar types of hedge funds, similar types of momentum traders are getting involved in the name. So it reports what happens. We're ready. Number one, it gets moved to the number one idea in the morning game plan, number idea sheet. I put in my S1 and I put in my S2. In the pre-market, it was having some trouble around $59, $60 a share, but right on the open, they dropped it out to that S1, S2 to 54, 53, and immediately it reverses back above. That was kind of the first signal on the 5-minute. It closed above S1 to get involved. Target is pre-market resistance, top blue line, and then the rest of the day, if we drill in, what we can see is on the open, it dropped to support, quickly reversed, closed above. Next big move was to the upside. Eventually, by 11 o'clock, tested the pre-market high. And then in the afternoon, if you didn't catch that initial move in the morning, that's the one you really want to be in, actually, from S1, S2. A stock that you're expecting to go to the pre-market high based on the pattern, you do want to get involved in right around S1 and S2 on the reversal bar. And later in the day, if you can get a consolidation, like I highlighted on the top of the right hand of the chart there, a tight consolidation near the morning high, that's where you can put on a position with a very small amount of risk below the consolidation and look for a close at the high of the day and then follow through the next day. And then on the next day, what you'll see is it opens actually below the 330 support, which is a perfect setup for the next day. And this second day trade that you're seeing right now with this chart, it's actually taught in the trading workshop. And so again, the link on the video here, the free trading workshop where we spend about 2 hours going in depth on 3 different topics. One of them is the second day trade, where I teach that in depth, as well as how to identify these, how to do stock selection and identify and play names based on a catalyst. Mike Bellafiore, my partner, also teaches something. So there is a couple of hours of free good stuff in terms of stock selection and how to trade some of our top setups on the desk. But this is it. Like second day, it opens below the 330 support, immediately gets above the prior day's high, and trades up 2 ATRs. And so this was, kind of a cool thing. Here's the recap. Identify a trading pattern. It's not just the price action, it's understanding the fundamental and technical characteristics of the stock. Find other stocks with the same characteristics that haven't reported yet. And if these are liquid stocks that have options and the characteristics of the first 2 or 3 stocks that have reported are large moves, then you want to put on options trades with puts or calls, depending on the direction of those initial ones that we've identified. Hopefully you learned something today. I think this is a technique you will use every quarter based on the patterns that show themselves at the beginning of earnings season. Work on it so you have a little bit more of an edge and you can trade with more size on those stocks that report later in earnings season.